Hi, and welcome back to Big M Research. We'll be taking a look today at an interesting way, to say the least, to more safely take a somewhat short stance in silver on both price and implied volatility, as silver gets a little bit rambunctious to the upside and implied volatility definitely ripping higher as well. And we're using the ProShares Ultra Silver 2x ETF AGQ, which basically is priced on 2x the daily return on silver. So let's jump in and take a look at an interesting way to go about taking this position. First of all, here's AGQ, which is the only ETF that targets 2x the daily returns of the silver futures, which move in lockstep with the price of silver. As you can see, is AGQ suitable for long-term investing? The answer really is no, because of the daily kind of rebalancing, leverage resetting. It can erode returns over time. They give up a little bit each day, so it tends to underperform a 2x return to silver, which certainly for the trade we're going to be looking at, which is going out to 2028, is a benefit as well. We always like to take a look at the rationale behind the trade, reaching extremes, overbought on a technical basis. We'll take a look at a second. IV has gone absolutely parabolic, right? So as I like to quote from Tropic Thunder, you never want to go full retard. Silver looking like it's gotten to that full retard level indeed. So let's jump in and take a look at it. First of all, here was the trade on silver. It was going out selling the 615 call, 615 put, selling the straddle. You can see it was priced at about $655 on the close. I had tweeted out a little bit earlier, it was trading a touch lower, but certainly somewhere around that 655 level. You can see that silver has absolutely gone to the moon here, right? Getting overbought on a technical basis, 9-day RSI approaching 90 for really the only second time over the past year. Last time it got this, we had that sharp pullback towards the 20-day moving average. Speaking of which, we're trading well above that 20-day moving average. Another sign of perhaps over exuberance, plus did not actually break out to fresh new intraday highs, even though it popped higher again on Wednesday. So we'll see if that 411 and change level is indeed the top or not. MACD at an absolute extreme as well. You can see Bollinger percent B well above 100, which is implied volatility based. And here's a generalized look at IV, trading at by far the highest level over the past year. So certainly the technicals getting to an extreme that hints at perhaps a pullback, or at least a slowdown somewhere along the way in silver. We always like to look at implied volatility. Here's IV. This is the longest term one on this particular chart, 120-day IV. You can see just ripping to the upside at by far the highest level over the past year. High IV means rich option prices even on the long term. You can see an entire term structure volatility lifted from Tuesday to Wednesday, right, getting to even further extremes. You can see here on the long end, the January of 2028, which is where our trade resides because it has more interest in it out there, and IV longer term, right, doesn't have to jump as much to have a bigger effect on pricing. But you can see that jumped another 3%. Generalized shorter term IV, which it bled through, as we can see, the entire term structure of vol lifted, right? But not too long ago, right, IV was under 150 for the most part, right? Over the last several days has exploded to well over 200. We can see a 360-day IV chart. I pulled off the 75 delta call, which is the one we'll be selling, and the 25 delta put, right, which is the one we'll be selling, right. You can see has absolutely ripped to the upside, now trading at by far the highest level over the past 6 months on both the calls and puts. So all we're really looking for is a pullback in IV back towards that level it kind of reached and pulled back to before. That's all it'll take to get this trade in profitable territory, to say the least. So taking a look at the theoretical trades, right? Here was our trade when it came out earlier. Stock was at 386. As we said, it ripped higher. The price of it now over 650, but you can see selling the 615 call, 615 put for over $640, no problem at all. You can see implied volatility on the call at about 130, the put at about 147, right? You can see implied volatility generally at the highest level we've seen over the past year. So I simply pulled off the trade selling this straddle, and it'd be interesting to note here, right? Selling the 615 put at over $640 means there's zero downside on the trade, right? AGQ could literally go to zero, still make money long term on the trade. The upside, you have plenty of upside. We'll take a look at a second. So here's the theoreticals on the trade. You can see with IV at, as we talked about, 130-ish and 137. That theoretical around that 643 level. Delta on the trade, negative 54 delta. So the calls, even though they're more than 200 points out of the money, the 615 call with AGQ at 400 where it closed on Wednesday, right? 215 points roughly out of the money, yet the delta is 76, right? The delta on the puts, which are in essence 215 points in the money, right? Only at a 22 negative. So the calls trading a much higher delta than the puts, even though the calls are way out of the money, the puts way in the money. Why? Because IV has exploded. It skews the delta. So I simply said, okay, let's have the deltas keep the stock price the same, but let's see what the theoreticals do if we drop the IV 10 points on both the calls and puts. So moving the call delta to 120, the put delta to 125. The theoretical on that straddle now, 605 from roughly 640 before. So you'd pick up 35 points just for a 10-point IV drop, right? So 35 points if you do it one time, $3,500 gain, nothing wrong with that. You can see the delta with the lower IV, right, is now only a negative 48 delta. Before, with the IV 10 vol points higher, you'd be negative 54 deltas. As we talked about, higher IV on the especially longer term pushes that call delta to a much higher level, right? Lower IV brings it down. So another interesting fact on these huge IV pops, right? Wherever you see this IV explode like we've seen here on both the calls and put, it really starts to skew that delta. So even just playing for a drop in implied volatility and really not looking for a pullback in silver or AGQ, but a pullback in the IV that we've seen this huge run up just back to this 130-ish level is all we're looking for. We're not looking for a big tomahawk, right? Just a retracement to kind of where it was before would lead to a very nice gain on the trade, as we said, leading to somewhere around a $3,500 gain for just one contract, right? Able to sell it at over 640, buy it at right around 605. Let's take another look at it from a theoretical standpoint, right? Here it is. Let's say AGQ goes to 440, so a 10% rise, but you have that pullback in IV, right? You would still make money on the trade. It would theoretically only be worth 625. We're selling it for about 645, right? So a very nice gain on the trade just because of that pullback in IV outweighed the 10% negative move on the stock. And let's say we keep IV the same, but have the stock drop 5% to 380, you'd still make money on the trade. So a small drop, 5% pullback on this huge rip-roaring rally. And again, we're only looking for a pullback towards the 380 area right around here, not a big pullback, right? Not looking for a lot would lead to a very nice gain on the trade as well of roughly about $1,000. So a pullback on IV, which we really anticipate giving that huge spike in IV. It's hard to maintain this sort of parabolic move on IV, given the fact that it was trading at 150-ish not too long ago, a few days ago, and also on the stock price, this parabolic move, just looking for a pullback of some sort or even a slowdown would make sense as well. And remember, we have huge positive theta because of this jump in IV. We're making about 25 cents a day just on time decay as well. So from a trade margin perspective, I pulled off. I actually did the trade one time in the account just to see it. Got roughly $642 on the trade, right? You can see selling that 615 straddle out in Jan 2028. So I simply did a break even, right? Selling the 615 call and put. The downside break even, there is no downside, right? You'll make 27 bucks roughly, even if AGQ goes to zero. Why? You're selling the 615 put for $642 roughly. The call would be worthless. To the upside, 615 plus the 641.95 means your upside break even from a naive perspective, 1256.95. So you got over 850 points more for AGQ to head higher from here, or a 210% move higher until the trade gets into trouble from that sort of perspective. You can see AGQ, I pulled off the price at roughly 405, right? I gave it a little wiggle room even, right? The margin requirement only about $8,000, right? So if you're able to make a couple $3 grand on $8 grand, you can make a very nice 25-30% gain with just that pullback in IV, or just the pullback in price, or hopefully the pullback in both. And the strange thing about these commodity-based stocks, a drop in silver, which would be a drop in AGQ, will also lead to a drop in IV. So you get kind of that dual benefit. So able to sell implied volatility at an absolute extreme, as we have seen here, no question about it. Able to sell the stock at an absolute extreme as well. Will it absolutely work out? That is up to the market to tell you, right? But anytime you have this kind of edge where you have a huge implied volatility spike and a huge price spike you're able to sell into and just look for a reversion, certainly I think warrants at least taking a small position. But as we always know, right, trading is all about probability, not certainty. So make sure you position size accordingly. Make sure you don't let it get out of hand if for whatever reason silver heads to the moon. So we'll be back when we take this trade off. All we really need, as we said, 5% pullback in AGQ, which would equate to about a 2% pullback in silver from these extremes, or IV coming back down about 10 vol points, right, which certainly can happen very quickly as well. So until next time, as always, here's the good trading. Take care.